Hi! It's finally here. I figured that our new stop limit order deserves its own video rather than my original idea of including it as part of my favorite trading features. It would be best if you go through the FAQs of the Pro conditional orders and maybe play around with our stop limit simulator, also found on the website. Let me start by briefly describing different types of orders so that I can situate where the stop limit order fits in. There are regular orders that are sent directly to the stock exchange in a single step. The market order that isn't currently used in our market, and the limit order that we are all familiar with. And then there are the two-step conditional orders that first require a condition or trigger. When the condition or trigger gets hit, an order is then sent to the exchange. The stop order is the best example of this two-step conditional order. I'll briefly describe two types of stop orders. There's a stop market order and the stop limit order. Pro now has a stop limit order. I will also briefly discuss an order type that is closely related to the stop order, the if touched order. Very quickly, the market order is not currently available in our market. Basically, I would use this order only if I am 100% time sensitive and 100% price insensitive. I want to buy X shares of the stock regardless of the selling price. I don't care if my buy price is the same or 50% higher. I just want the stock now. This order type would be quite dangerous to use, especially on illiquid stocks, unless you really don't care about price. Market orders are available in the US, for example. The regular order that we have in the Philippine stock market and are all familiar with is the limit order. I want to buy X shares of ABC Corporation at a certain price limit or better. If there are better offers, well and good. I am only willing to pay a maximum limit of X amount. I don't mind waiting, and I'm okay if my order expires before it is completed. I have a price limit. All of us are used to this type of order, even outside the stock market. I want to buy that particular phone model at a maximum price of 30,000 pesos. I don't mind if I wait a month. Or, I want to buy stock ABC Corporation 300 shares at a 100 peso limit. Good till month. Okay, so now that I briefly described the regular order types of market versus limit, let's talk about the two-step conditional orders, focusing on stop orders. I would use a stop order when I first want a price condition to be met before I send an order to the exchange. The best sell example of this is when I want to protect myself from significant losses when I put on a trade. Or using the same logic, when I already have some gains and I want to protect a portion of my gains. This is sometimes called a cut-loss order. So I set the condition or a trigger. For Excel users, this is your if statement. I then set up the order to be sent to the exchange when the trigger is hit. For Excel users, this is your then statement. Let's say I had bought 300 shares of ABC Corporation at 100 pesos. Based on my personal trading rules, let's say my initial cut loss limit is 7% or 93 pesos. And I want to sell at least half of my shares if the price drops to my cut loss limit. I would set 93 as my trigger price to sell 150 shares. And then, I also have my pain tolerance or my pain limit. What if it drops suddenly to 60 pesos? Am I still willing to sell? I don't think so. I'd rather wait. How about 80 pesos? Well, my personal pain tolerance is a 10% drop or 90 pesos. So 90 is my limit price. When the stock drops to 93, I will sell down to 90 and hope to get done at a higher price. I will keep this order on for 1 month, or GTM. Note that the sell stop trigger price should always be set below the current price. If I need to sell above the current price, then I would just place a regular sell limit order. So why stop limit? Where did limit come from? Before I continue with other examples, let me first describe stop market versus stop limit to get this detail out of the way. Just be patient with me here. As we reviewed earlier, there are 2 types of regular orders, market and limit. There are thus 2 possible kinds of stops. A stop market that, when the trigger price is hit, will send a market order, and a stop limit that, when the trigger price is hit, sends a limit order. But since, as I said earlier, we don't use market orders, then we likewise don't have stop market orders. We only have stop limits. So let me move on to my second use of stop limit orders, buying on breakout. Technical analysts especially want to see price confirmation before they enter a buy trade. So I'll call this more specifically buying on a pullback after the breakout. Let's say that in our example, ABC Corporation had been trending downwards, and then it flattened out for the last 3 weeks into a sideways range, bouncing between 85 and 100, possibly with my technical indicators turning bullish. Let's also say that my strategy is to buy 300 shares on a convincing breakout of at least 3% above the 100 peso resistance. But I'll wait for a price pullback close to the previous resistance, now support, of 100 pesos. I'll buy at a pullback to 1% above the 100 support or a 101 peso limit. I'll keep this trade on for a week, or GTW. The trigger price setups are quite counterintuitive since we are all used to setting limit prices. If I post a regular buy limit order over the current price, it will instantly get hit. By the same token, if I set up a buy trigger price below the current price, it will instantly get triggered. I cannot overemphasize this. The trigger price for a buy stop should be placed above the current price, or it will instantly get triggered, and vice versa. I included another set of conditional orders in my list. If touched. An if touched order works like a stop order, but it is placed on the other side of the last price. For example, a sell stop order placed above the last price would instantly get triggered. An if touched order won't. It is designed to work like a stop order but be triggered by the opposite price movement. So what would this type of order be practical for? Allow me to focus on the if touched limit order. The if touched limit is sometimes called a limit if touched or a lit order. How would I use a lit order if and when it becomes available in FirstMetroSec PRO? As opposed to a limit order, I could use the lit order to more aggressively execute my order when my target price is hit. One quick example. What if I purchased a stock at 100 pesos and it is now approaching my very profitable target of 170? I can place a sell limit price of 170 or maybe 168 and hope to sell all of the shares that I had bought at 100 pesos. Or I can use a lit order. As soon as my sell trigger price of 168 is hit or is lit, I will slam down the bids until, let's say, 160 and still be happy with my profits. I would thus place my lit sell trigger price at 168 and my lit limit price at 160 and hope to get all my shares sold at a price higher than my 160 lit limit. Lit will probably have its place in our platform sometime in the future. We'll take it one step at a time. For now, I'm celebrating our stop limit orders, the order type I'm most excited about, and best used for buy-on breakout and cut-loss strategies. In the next video, I'll talk about how Recognia, or the chart pattern recognition feature, helps me set up my trigger prices. And that's it. To learn more about Pro and its amazing features, visit our website at www.firstmetrosec.com.ph. You can also subscribe to our YouTube channel for other videos like this one.